Well, after a fairly flat weekend of price action, it is currently looking like Bitcoin might want to attempt a breakout to the upside. Now, whilst that should be positive, it actually has me very, very worried for the week ahead. Probably not something you want to hear. There are a lot of people online at the moment saying that they're done with crypto, they're over it, they're going to move to traditional markets. That is the time where you could be setting yourself up to make life-changing money. It could be that is exactly what they want you to think. But in this video, I'm going to talk to you about why I think Bitcoin might make a move up and why that would actually be bad if it does. So if you're new here, welcome. If you're returning, welcome back. My name is Annie and this is Trade Travel Chill. If you are not already subscribed, consider subscribing down below, and whilst you're down there, hit that like button nice and early. Let's get into it. Okay, so let's first take a look at the daily time frame for Bitcoin. I'm not going to spend too much time on this because not too much has happened in the last week, and my update from last Sunday is still really quite relevant with what is happening right now. The largest amount of liquidity that we have available in this entire range is still essentially in the same spot. So when we have a look at this big range that Bitcoin has been in essentially since February this year, the liquidity that is available is still at the very top of the channel and the very bottom of the channel. We really have not built any high levels of liquidity in between those two levels. What that means is that in order for the market makers to make their next big move, they're going to have to drive price into one of those two areas. Now, the larger liquidity currently is actually to the upside, but we have a few roadblocks that we still have not overcome since last week before there's any chance of us thinking about those sorts of levels. And here's what they are. Right now, price is in between the 200 and the 50 EMA. When price is in between those two EMAs and those EMAs are flat, like they're quite horizontal, as you can see they are here, that is essentially a no trade zone. So we need to wait for price to make up its mind. It either is going to break right above the 50 EMA, retest and hold that 50 EMA as support. And if it could do that, that is when we would start to believe that it's going to come up for the higher levels of liquidity as the next step. However, if price rejects again under the 50 EMA and it fails to break above it and we start to get bearish candle closes, especially on higher time frames, that's when we would expect that it's essentially creating another lower high, and we're probably going to come down for the lower level of liquidity first. So right now it's impossible to know which one because we're right in that decision point, and it's looking like on the daily time frame that the price is attempting to create somewhat of an ascending triangle like this. Now, an ascending triangle, it depends on what the price action was prior as to whether or not that is bullish or bearish. When the price action prior is bearish, we would expect that it's going to break down to the downside. However, when we trade the TBD system as we know it, the more times that price attempts this resistance level, which is at about 61,700, if it continues to create higher lows after every attempt at that level, we would actually expect that it's going to break out to the upside. So we don't have enough price action right now to know which one is going to happen. And this could possibly take a few weeks, as we only really have one touch to the top and two touches to the bottom trend line. So it could really do something like this for quite some time, then potentially break out, get our retest. That's where you would then take action on this. And the bearish scenario on that is the same, that instead of continuing to create higher lows, at one point it will create a lower high, and the lower high is where you would then draw the conclusion that it's going to break to the downside. So this kind of pattern, it just needs more time, and in between, whilst it's doing that, whilst it's consolidating in this triangle and there is no actual breakout yet, it's essentially a no trade zone, which I know that's annoying, especially for day traders, but it is what it is, and sometimes you just have to be patient. Now, when we jump down to the 1 hour time frame, what we're more interested in is the liquidation levels that would have opened up over the weekend, because when you understand this method, you will know that the week usually begins with a false move, and the idea of the false move is to stop out any weekend traders who open positions in the wrong direction. And therefore, instead of zooming out and looking at really high time frame liquidity that has been building over months, we really only want to look at the liquidation levels that have been building over the weekend. So what I have marked on my chart now in the dark blue and these pink and red lines, they are the liquidation levels of traders over this weekend. And I just want to show you on high block because it's a little bit more clearer there. When we have a look at this Bitcoin chart here, this is showing us in a lot more detail all of the liquidation levels. And if you are interested in getting high block, there is a link to it in the description of this video. But when we have a look at this, we're looking for the highest spikes and the highest amount of liquidation levels, as they will often act as areas that the market maker will spike into at the beginning of the week with the purpose of liquidating traders, and then eventually the price will turn around and we'll go into a 3-day trend. When I have a look at the delta, which is this red area down the bottom, red is bearish, so there are more people that are short currently than there are long. And you can also see that when you look at this blue zone up here. The blue zone is showing us the liquidation levels of current open short positions. So even though price is trying to attempt this move up, which is pretty dismal, it's not a great move up, I'm talking about this right here, people are still bearish, and on moves up, they're opening short positions. When you compare that to what you see down below, really what you're looking at is how far these spikes come out. This is what I pay most attention to. And so you can see that the largest spikes out to the right of the screen are above the current price. So there is more capital there, meaning if price were to move up, the market maker is going to collect a lot more money than if they were to move it down first. Now, the prices of these super high levels sit between about 61,480 and then the highest level, which they don't always come for the highest level, so we just want to know the range, sits at about 63,380. Let's have a look at what that looks like back on a normal chart. And you can see here, this blue line here is the highest level that I read out to you, and the level below that was back at about this range top right here. Now, that just being the largest, obviously when you have a look at high block, look at all these other little levels in between. So if price were to spike up in order to liquidate these largest positions, it's going to also take out all these lower positions as well, and that's going to actually take out quite a fair bit of liquidity. And the reason why I tell you I think that is a problem is because when I have a look at the social media sentiment for Bitcoin right now, we are at a 0.2, and 0.2 is towards the extreme bearish end of the spectrum, right? It's not extreme. A 0 is extreme, but it's, you know, not too far off that. And like I said earlier, a lot of people are at the point of, you know, posting things on Twitter wanting to give up on crypto at this point in time. And we're really at that phase of just major frustration. And so therefore, if most of social media sentiment is bearish and the highest level of liquidity is above price, this is where my worry comes in, that the false move week beginning might actually be a move to the upside that might be fast. It might look big. It might look like a breakout of the daily level that we spoke about. If I go back to the daily chart, you can see that the highest level would be just above the 50% area. There is a very good chance right now that if I draw back in that ascending triangle that we spoke about, if the price did make a false breakout to take out this liquidity, people would switch instantly bullish from their current bearish sentiment because we have a breakout of a typical retail pattern. And if that's all the liquidity that the market maker wants to take, then that could act as a one-day false move, and then we actually end up coming down from there. Now, if you've been watching this channel for a while, then you will know that when I say things like I'm worried this move to the upside might be a false move, that doesn't mean I'm worried that the bull market is over. I have been very well prepared for this accumulation phase. I know that it goes on for a few months after the halving. I know that we won't break out until we're in extreme boredom and people give up and lose hope. And it looks like we're getting to that stage now. So when I say I'm worried, it's not that I'm worried that I think the bull market is over. It's more that I'm skeptical. I'm skeptical that if we do have a move that breaks out to the upside at the beginning of this week, that it will be a false move, but the whole internet will turn bullish again, and then it will be over. But as I've been saying on my videos for quite some time, in that moment of it's all over is probably going to be the biggest opportunity for the rest of the cycle that we have. And so for you guys that watch me, like, I encourage you to just push through this final phase. Like, this is the final shakeout phase that happens always around the halving. When you trade this method, then you understand that the market maker has a number of objectives, and that those objectives are always to induce you, to get you to the table, to get you to do something. And they do it in different ways. Fast moves is one of them, by just price just breaking out of a key area, not coming back for a retest. That causes you to FOMO, to think, oh, I missed it. Should I jump in now? And then you jump in at the worst possible moment. That's one way. You've probably experienced that many times in trading, because we all have. But another way they do it is to push you into extreme boredom, where you start to guess what's going to happen next. You give up. As you can see, social media sentiment is extremely bearish. They're going to have you believe you were wrong about that. They're going to have you change your mind. They're going to have the whole internet turn green, and then that will be turned around against us, because everybody's going to open long positions and be like, oh yeah, it's not over, the bull market is back, you know? So we have to be very, very careful whilst the price is trading in this range, and just understand the way that the model works. Understand that the weekend price action is designed to be boring, because there is no volume, because the market makers aren't around. But that boredom of the weekend is designed to entice you into a position to guess, because what happens every time price goes flat, sideways and boring, everybody starts to say a breakout is imminent, a breakout has to come next, and you don't know which way. So traders start to guess which way it's going to break out. Some will guess long, some guess short, doesn't matter. As long as you commit to a trade, the market maker has reached their objective, and then come market open, they issue that false move, take out the majority of traders that were actually wrong, or potentially right but had stop losses too tight, or trading on too high leverage and it hit their liquidation levels. But that doesn't matter, because that's how the market maker fills their bag. So once the damage is done, the damage is done. If you are looking for a cryptocurrency exchange to trade on, consider Bitunix. Bitunix is a non-KYC exchange, meaning that it is available for you to trade on no matter where you are in the world. There are many, many coins for you to choose from for trading, and you can trade both spot and futures on Bitunix. New users also get access to welcome bonuses, and you can get up to 5,500 USDT worth of newcomer rewards for completing different tasks. In addition to that, if you use the link in the description of this video, you will also get a 25% trading fee rebate on all of your futures trades for life. For further details on how to sign up to Bitunix, be sure to check out the link in the description of this video. So all of that to say, if tomorrow opens with a move to the upside that looks like it's attempting to break this range, just be very, very careful that it's not a false move. And how you're going to know it's not a false move is if it retest and it creates new structure that breaks above the 50 EMA. Otherwise, it's a false move. When we have a look at the stock market, we can see both the S&P and the NASDAQ are both back in the area of interest from my last update. So this is at the crucial point now, because if this is going to reject and head further down, it pretty much has to happen early next week. So it has to happen, you know, within Monday or Tuesday next week. If price breaks above this red vector right here, it's kind of hands off for now and just see what happens. It doesn't mean that we're not going to go down yet, or that there will be no second side of an M formation, because we do have other vector candles up here. So we could essentially come right up into this range and still essentially be bearish, but you wouldn't be holding on to short positions all that way. You'd be reassessing what happens if it gets in that area. So we still currently have the same area of interest on the S&P, because this candle did not actually close above it. If we start the week that does break above it, then we're going to move this area of interest up into these red vector candles here, and we're going to keep an eye on them. But the reason that we're keeping an eye on them is because if the stock market turns bearish, if this does turn out to create an M formation, then crypto's really not going to have a chance against that. So we really, at this point in time, it's very critical that we keep an eye on the S&P and also the NASDAQ. If it does break above these vectors, then we have this situation going on where it was essentially just a bit of a sell-off and the trend continued. In that case, everything would be okay, and we can go back to trading crypto for whatever crypto is doing. The NASDAQ is the same. So NASDAQ is in the same area right now. So these are very important to watch how they open next next week and the first couple of days at least. Also, if it does break through that area of interest, there is also another red vector above it as well that we would then look out for next, because that could still end up creating a lower high. Looking at the Bitcoin dominance, I want to focus on Bitcoin dominance. We have the breakout of the ascending triangle. It's a little bit of a retest. It's kind of just consolidating now. It's not really trending. It's not doing anything, but it's consolidating as a retest of this prior ascending triangle. And we are really waiting for the Bitcoin dominance to get up to that 60% level. That's where we usually see alt season start. And I know nobody wants to talk about alts right now because everybody's bleeding and they hate them all of a sudden. But, you know, again, it's in these moments when you have these thoughts that the best opportunity is actually created. So just keep your wits about you. Keep charting your favorite altcoins. Keep charting them against Bitcoin. Keep setting your levels and setting your alerts, and just get ready because it could come when you least expect it. And I'm not saying, you know, that I think it's going to come this week, because, you know, it's got a long way to get up to 60%. So I still have the same like timeline horizon that, you know, we're watching this over the next couple of months, not over the next week. When we look at the heat maps, I'm not sure if you can hear that. I'm in Bali at the moment, by the way, and so that's why it's so dark outside, because I'm on a completely different time zone. So it's getting quite late over here. But there's a storm brewing, I think. So apologies if you can hear it. When I have a look at the heat map orders, there's really nothing there. There's nothing to alert me when I'm having a look at futures orders, not above or below price. We still have these 47K large orders that sit between 47 to 47.5. Could be a trick. So I'm not saying we're going down there. I'm just aware of it. And I've also put in cheeky spot orders just a little bit above it in case we do. And I happen to get a wick in to pick up my order. But other than that, you know, that is really all that the heat maps are showing us right now. And sometimes it pays to look at other exchanges, especially on a weekend. I often have a look at what the Bitunix Exchange is doing, because that is where the whales tend to trade on, being the OG exchange. And on Bitunix currently, we're just essentially still holding the weekend range. There's long orders at 59,300. There's short orders at 60,550. That's nothing to get excited about. It's literally just holding the weekend range. And so then that prompts me to have a look at coin futures, because coin futures is where you can trade on leverage, but you're using Bitcoin as the margin. And so you take your profits in Bitcoin. So it's a really good way to accumulate Bitcoin. And it gives me a hint when I have a look at coin futures, if I can see large orders there, it actually gives me a hint that the people with the large money are actually bullish, because if they weren't bullish, they wouldn't want to be accumulating Bitcoin right now. They would be leverage trading in USDT because they want something stable. But if they're putting in large orders on coin futures contracts, then that makes this whole range an area where they're still accumulating themselves in, you know, multiple ways, but this is one. And so when I have a look at coin futures, there are currently buy orders, high level buy orders, sitting at around 59,400, which is again is just the current bottom of the weekend range. Nothing to get too excited about. And there's a fair few different levels above price. We've got a kind of flashing area at around 60,725, and then we've got a fair few orders around 62,700, with the highest being at 62,800 currently. So when we go back to the chart again and we look at our liquidation levels, the 62,800 would actually wipe out the 100x traders, the 50x traders, but it would leave these 25x traders. And usually that's what we see with a false move week beginning. We see the 100x get taken out and the 50x, but we don't always see the 25x traders get taken out. Now, when I have a very quick look at the 15-minute time frame, which is usually where you will identify the false move week beginning, I don't currently see it. I do see that there was a move out here, then this move back did cause some liquidation. So the false move week beginning will cause liquidations. That's how you can identify which one was the false move. So when we have a look at this little fake out right here that we had a little bit earlier today, you can see that once this red candle formed, the open interest dropped sharply. So a drop sharp in open interest is people getting liquidated. And what that means, actually, this is very, very easy to identify, would be that people would have drawn a resistance level somewhere around here. Maybe they even drew a trend line, you know, something like this. They've been waiting all weekend for breakout. Some people just put buy stops above the price. So they'll put in a buy stop order just above the resistance because they think, okay, price is creeping up, higher lows, we keep tapping on this resistance. If it breaks out, it's just going to break out fast, and I just want to be in the trade and I don't want to miss out. So they'll put a buy stop, and then they put their stop loss wherever, or some people don't use stop losses. And what happens is price shoots up, it fakes out, it opens up your position, and then it shoots right back and liquidates you. So, you know, if you have a properly placed stop loss like this, you haven't been liquidated yet on that move, but there were some liquidations, and we can see that in the open interest. However, since that has happened, we have returned to the area. So usually that doesn't happen. We usually will see that once that false move is made, price won't return there because we need to keep some traders trapped as well because we need to liquidate them later. And if price returns to that level, those traders get to get out at break even and they don't remain trapped anymore. So I don't believe this was necessarily the false move just yet because I'm not identifying trapped traders, and we still just continue to create higher lows. But at this point in time, I do think that price should continue up to take out some higher levels of liquidity, and I would be skeptical that that is the false move. And at the end of the day, you just let that trend run and you watch the session changeovers when the week opens to see when that false move is over, and that's when it's safe to take a trade. And the only time I will change my mind on that, now we have fireworks going off. I don't know if you guys can hear them. The other potential possibility is that, I don't know why this would be, but for some reason, market maker hit the same level twice and we reverse from here, in which case price would have to break down below the 50 EMA and then change the structure, give a lower high. And that would be the only time that I would change my mind and think, okay, no, they're coming down for these lower levels down here and they're taking out longs instead of shorts. But at this point in time, I don't feel that way. So I'm just letting you know what would change my mind so that you know what to look out for. But right now, for what I'm seeing for right now, it makes more sense to me that the false move is going to be up to get everyone to change their mind, because right now everyone is bearish. So if they just send price right down, everyone wins. And that doesn't make a lot of sense.